Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing an important update about the economy, not only the U.S. but the global market, so you can better understand what we're seeing and how we're positioned for our clients. Last night, China came out and essentially is going to reduce their banking reserve requirements by half a basis point or 0.5%. This is an important announcement in the fact that China right now has the highest banking reserve requirements in the world. They're currently at 21%. What bank reserves basically are a banking institution's way to protect in case we go into a global recession or their economy has problems or in a bubble. When reserve requirements are actually raised, which China did over the last 3 years, they did that in order to help protect their banking system in case they did have an overheated economy. Their economy is slowing a little bit. Now, it's not slowing a lot, but it is slowing a little bit. So what they're seeing now is with their economy slowing, but not crashing, they feel that they can now reduce their standards within their bank on their reserve requirements down to from 21% down to 20.5%. In the U.S., by the way, we're currently at about 11%. So what China's basically done, which the U.S. should have done years ago, which got us into this problem in the first place, is had higher reserve requirements for the banks, and we wouldn't have had the credit crisis in the U.S. back in 2008, 2009 like we did. China wanted to avert anything like that happening, which in my opinion they definitely did. So now what they're doing is they're reducing those reserve requirements in order to help stimulate their economy to keep them on a good growth path. This is actually very positive news. Shortly after that, all of the central banks around the globe, including the U.S. and other countries, basically came in and added another liquidity line in order to help the banks over in Europe to make sure there is money flowing. This is another positive. Unemployment numbers came out, prelim numbers, and they were actually positive along with some of the housing type numbers. So generally speaking, we're seeing some positive numbers out there. I think we could definitely see a rally through year end. We are well positioned for that, I will tell you that. The biggest thing that I want to stress to all of our clients is we do follow an investment strategy. Emotional investing is only going to get you into trouble. Worried about what happens day by day and week by week or month by month is not an investment strategy, and all you're going to do is you're going to jump out of the market, you're going to jump back into the market. You do need to follow an investment strategy. Now that doesn't mean with our investment strategy that we may not come out of the market from time to time when our market trend indicators or our relative strength indicators dictate a change in the portfolio. As with any investment strategy, none is perfect and there will be short bouts of underperformance or caught on the sidelines. But over a long period of time, over a rolling 3 years, we are very comfortable in what we see and what we're doing. And I just want to stress that. And really what we see is we're seeing more and more investors, not necessarily our clients, because most of our clients have been with us for a long time, but we're seeing more and more emotional investors that are calling my radio show. And one of the things that's happening with a lot of people out there, and I think more so the do-it-yourself investor, is because they don't run with an investment strategy or have any real investment strategy at all, people tend to get over-emotional, over-hysterical from market moves or stuff they hear in the media. And I've talked about this many times. Media today is much more magnified than it was 20 or 30 years ago. The amount of media you see. What's happening today in the economy, not only here but abroad, is no different than it happened 20, 30, or 50 years ago. It's just you hear about it more. So emotions are going to get you into trouble. If you're an emotional investor, which again, everybody's got different emotions and they handle risk differently, if you're finding that the volatility is taking the best of you, call our office. Let's talk about it. But at the end of the day, volatility can be your friend if it's well managed within a portfolio, and if you actually take advantage of those opportunities. I believe we are setting ourselves up right now for a decent December year end, and I believe if we actually have Europe really solidly address their issues over on the other side of the pond, that 2012 could turn out to be a pretty decent year. We're still going to have some volatility. We're still going to be making changes when necessary within our portfolio and our global tactical opportunity portfolio. But overall, I do see volatility. But if Europe can really contain what's going on there, I think there could be a huge upside potential for the world economies. Not we're off to the races, but definitely better than this slow meandering turtle-like economy we've seen over the last year and a half. That could be a potential positive. Valuations, generally speaking, are pretty low on most equity-based markets. Although long-term bonds are extremely high, we still own our gold position, and relatively it looks strong. And as long as we continue to see the dollar go, in my opinion, over a long period of time lower, the printing presses, weak dollar policy, and what's happening over in Europe, I think ultimately gold has a chance to go higher as we see these constraints with the European situation. I am constructively positive. I believe we are extremely well positioned. But again, if you have questions about your portfolio, instead of being an emotional investor, work with us on a long-term basis, and I think you will be well rewarded. As always, if you have questions, make sure you do call our office. And if you have any friends or family members or business acquaintances that would like to get the Resnick Wealth Report newsletter or would like to talk to us about managing their wealth, pass it our name. We always appreciate your referrals. And again, call us if we can help you. And we have holiday season coming up, of course, which will be pretty quiet for us here at the office. But if you have questions, call us. We always love talking to our clients. And until next week, make sure you have yourself an extremely profitable week.